Hi, my name is Abram Caballero, and I'm gonna do my best to break down these life insurance policies so I can help you understand and make it easier for you to digest. And I'll give you a few examples for the same reason. So let's get right into it. I'm at a PHP agency down here in South Texas, Brownsville, by the way. You can always send me a message through the social media platform where this is posted, and I'll do my best to respond to you in a timely manner. Okay, so the first part right here is we're going to break down the three most common types of life insurance. The first one is this. It's a whole life policy. And with this whole life policy, it shows you here that it's lifetime level. Typically, it's going to be level premiums. We're going to get into the different types of whole life options that there is. But when you think of whole life, just think about it as whole life. It's going to be lifetime. So it's a permanent policy. It doesn't expire. It's level premium. Level just means flat rate. And then you have a savings component in the policy. So when there's a savings component, that only means that as you make a payment, it goes into a savings component. There's different ways to grow that type of that savings within the policy. And I'm going to show you the different types of ways to grow it. Your three options too. Okay. What other permanent option you have is a universal policy. Universal is also permanent like the whole life. It also has a savings component like the whole life, but the difference is the whole life is rigid. It's very, it's just flat. It's level. It's fixed. And this one, universal, is flexible. This flexibility just means that you can bring it up, bring it down. Payment and death benefit. So you can actually play with it a little bit more. It's more flexible. You can overfund it easier, and there's a bunch of other little things in it. And then your other option for life insurance is a term policy. And the term policy, you have to know, we're going to break down the types of term policies that there is. But term policy just means that it's written for a specific number of years. It can be 10, 15, 20, 30. It can also be one that's growing every single year. It's climbing up in price. That's known as an annual renewable term. That's another type of term policy. And it's the lowest cost life insurance. Why? Because it's temporary. So if it's going to be temporary only for a short period of time, then it's the least cost of insurance because it's only a temporary coverage. It's not a permanent policy. The downside to this one is that it expires. Even though you're paying the least amount of insurance that you can possible, with the highest amount of coverage, it expires, right? This is what it means, that it's only temporary for a short period of time. But on the next video, I'm going to break down the types of policies for a whole life. Then there's going to be another one that goes down for universal, and then the one that's going to break down all these term policies. And then we're going to go over the interest and all that, the interest crediting strategies. I hope it helps you out. If it does, go ahead and leave me a comment. If you have any questions, you can always reach out. But don't hesitate in doing so. And this is just the beginning. So this is video number 1.